Hi, so we're here today with Nicolas El Baze at the World Wealth Creation Conference. So thank you for your time. Nicolas is from a VC firm out of San Francisco called Partech. And so just a few questions. First, a little bit about your history.
Mine is actually quite typical of many VCs in Silicon Valley. I'm an entrepreneur turned venture capitalist, so I started a bunch of companies for first part of my professional life. Partech Ventures actually became an investor in two companies that I founded, and so that's how I ended up joining the team in San Francisco after those companies were acquired.
Okay, great. And so why did you pick San Francisco? I mean, for myself, I feel like it's an obvious answer.
Right.
But
Well, I mean, the notion that San Francisco and Silicon Valley is the center of technology has been challenged for many, many years because everybody always said, okay, once chip manufacturing moved to Asia, oh my God, Silicon Valley is losing its lead. That wasn't the case when software development started moving abroad. Oh my God, Silicon Valley is losing its lead. That wasn't the case when global networks and social networks became global. Oh my God, same thing. And eventually the largest companies like Facebook and and Google and Uber and Twitter, et cetera, still end up largely in the valley. So why not be in the valley is really the relevant question.
correct. Yeah. So do you mind telling me more about Partech and like what type of investments they look at?
Yeah. No, with pleasure. So Partech Ventures is a global fund. We have offices today in Paris, Berlin, San Francisco. We, unlike many global firms that have more siloed teams, we operate as a single integrated team and look at investments from a kind of global perspective from the get-go. So we like companies that have this global outlook. That's not the only criteria, obviously, but that's I would say a characteristic of the firm. We invest in technology companies only, but a broad spectrum of technology companies from infrastructure all the way to consumer businesses, as well as anything in between and enterprise software. As long as technology plays a meaningful role in enabling these businesses or being the justification of the business itself. And then we invest at multiple stages of these companies. We have a different vehicles for different stages: seed fund, venture fund, and a growth fund, which allows us to write checks from 250,000 up to 50 million, depending on the cases and the maturity of the company.
Okay. So what are the primary things you look for when you are looking to invest in a company?
At the risk of saying something that's been repeated over and over, I think it all starts with the team. We, as I mentioned earlier here, it's a long-term commitment between investor and entrepreneurs. It's a mutual commitment when you start getting involved with a company, and so it starts with that. And now, obviously, that's not the only criteria. We have to believe in the market. We have to believe in the superiority of the approach or the technology that this team is promoting. And we have to understand the space and like the space as well, and be able to bring some value to the table as well.
So at this point, I feel since you've seen so many different companies and you've had quite a number of IPOs and M&A deals as well, are you able to identify quickly like which ones might be decent exits from like day one when you meet certain companies? No, they just need a little grooming.
Yeah, I mean, I wish we had the perfect model to do that. All of us VCs, wish that. The reality is that it's a tough business, right? And the rate of failure in tech companies and in I would say high growth tech companies is meaningful. Now, on the other hand, this is clearly a business from the venture investor perspective, a business of pattern recognition, right? A lot of talk about machine learning these days, but it is kind of the case for venture investing. So you get better over time at identifying the pattern that you think are going to work, and you definitely get better at identifying things that won't work, right? So and I noticed even personally that you get a lot quicker to say no, right? And we regretfully spend most of our time saying no, but we try to do it very quickly and respectfully in a helpful way to the entrepreneurs.
And then, of course, because it's kind of a hot topic in fintech, what are your takes on cryptocurrency, ICOs? It's a different ball game here. Back home, I think it's starting to pick up as well. When I was back in San Francisco, everyone has an ICO.
Well, I think it's so. First of all, the phenomenon cannot be ignored.
Yeah.
And some VCs might look at it as competition also, and if you talk about ICOs. I think two things. I think first of all, there's a maturing of the ecosystem that is going to happen. It's going to happen quickly because it needs to be somewhat regulated and organized. There's already instances of companies raising money in ICOs and running away with the money, and there's, it needs to be professionalized and organized. I'm trying not to say regulated, but at least with some transparency and organization structure around it. Now, so we take it seriously as part of the environment. Now, on the other hand, I will say that there's a difference, the same difference between venture and ICOs, for example, that there is between venture and just money, or non-professional money. When you take money from a VC, you choose a certain business model, right? You choose a certain governance model that has constraints, but that has also a lot of value. You're not just taking money; you're taking advice. You're building a partnership with the investors and the firm, and none of that exists obviously if you just take money for whatever the form of the money is.
Yeah. So I guess what are the few tips you would give to like a young entrepreneur wanting to start a business? I know it's quite vague, but
right.
You have to bullet point a couple of things.
Okay. So the first one is that really what you want to do? Right. It's tough. Right. Are you ready to fail multiple times and learn from it? Are you ready to have your back against the wall or stand near the precipice and be okay with that? It's a really important question. It's a lifestyle question, right? And not everybody's made for that. Not everybody wants to do that. Again, there's no right or wrong answer. It's a very personal question, but it's a question that sometimes people forget to ask themselves really seriously, because you get you see the shiny object, you see these stories about people making millions or zillions of dollars in a year or two, and you think, oh, I'm going to do the same. Well, the reality is that the average time between first institutional investment and M&A exit in Silicon Valley is 8 years. Right? Now, there are exceptions, but an IPO is longer, it's more like 11. So it is really a longer term commitment. And I think, the one advice I'd give is be sure that's what you want to do, right? Because it's going to be tough. And now the other advice that sometimes is I see too often ignored is a people related advice, which is don't do it alone. Don't even start alone. Find one or two co-founders that are motivated by the same vision. First of all, it's a good test of your vision to have at least somebody else, bought into it. But also, it's because it's going to be tough. It's going to be a lot easier if you have somebody else that when you're feeling down isn't, and vice versa, right?
Support you, yeah. And so are there any innovations that you'd like to see in, say, the next, I would say 5 to 10 years? If I was overly ambitious, I'd say the next 2 to 3, but yeah.
So I think, that's not a question, it's a wrong question to ask an investor, if I may say so. And the reason is fundamentally that we're not the visionaries, we're not the innovators, really, right? The entrepreneurs are, right? If I was the guy with the innovation, I'm in the wrong seat. I should be starting a company, right?
Yeah.
And so our job, in a way, is to find and identify the people with the vision and the innovation and help them. Right? It's not us. It's not. We're in the wrong role. If I can answer that question, I'm in the wrong role.
Okay. And then the last question, because we are at the World Wealth Creation Conference, year to date from birth to now, what is the best investment in life?
Best investment in life.
It could be financial, it could be personal, it could be...
Ultimately is to surround yourself with people who are the people you want to be with. And so, be kind, giving, generous, and loving, and you'll get it in return.
Wonderful. Thank you so much for your time today. All right, bye.
Pleasure.